Okay, so welcome everybody. Nice to see you all. Happy to have everybody with us. It's time for the Thursday night webinar. This, of course, guys, is the webinar where we talk about everything trading related. We spent, the huge majority of our webinar webinars talking about our option trading strategy and all of that. Remember, all those webinars are posted. You can go back and review them. If you're thinking to yourself, I need like 36 or 40 hours of webinar material to go through, we got you covered. If you find yourself bored over the holiday break, I got 40 hours of webinars for you to watch. But they're all posted. Go back, look at them. Everything that I post has a little description, so it's good to kind of just peek through those and say, hey, do I feel comfortable about this, or do I feel comfortable about that? If I do, if I don't, look at the webinar. I think we've covered everything. So what we're going to cover today, what we're going to discuss today, we have discussed to some degree, but I want to talk about it just a little bit more. We're going to talk about forex and option trading today, but we're going to talk about it from the perspective of the charts. So I want to talk a little bit about the chart details there. But before we get started, any burning questions, comments, please make them. Mel is asking, is our technique usable for IRAs or Roth IRA accounts? Sort of. If you have an account with Tastyworks, I think, or I feel like, and I can't verify this, but I think Tastyworks lets you do more with an IRA account than most brokers do. Most brokers, you can't sell options with IRAs. I don't know. I mean, maybe regulations are changing. I really only use Tastyworks at this point, so I don't know what other brokers are using. But when Tastyworks started saying, "Hey, you can sell options on an IRA account," there was a lot of other brokers that didn't allow that, like Schwab and TD Ameritrade and so on. Maybe they do now. I don't know. But you can do pretty much everything with a Roth, with an IRA or Roth IRA. That you can with a normal account. The only thing I think that's very different there is that you can't, I don't think you get any margin with an IRA account. So if you buy $10,000 worth of stock, you got to tie up $10,000, as opposed to your individual margin account, where if you have $10,000 worth of stock, it only costs you $5,000, right? So no margin. Yeah, and Lenny, you've had that experience. Okay, Yep. So I think that's the big difference. But I think you can still do all the same stuff with your Roth that you could with a individual account. Hey, Corey, nice to see you, my friend. Okay, so today we're going to talk a little bit about a whole bunch of stuff. Let's see. Your question, Mel: does Tastyworks stop you from making a bad IRA? I wish. The government and these brokers and everything, they're trying to protect us from ourselves, right? So I don't know if they'll stop us from making a bad IRA trade, but they'll give it their darndest for sure. Okay, let's have a look at the screen. Questions, comments, send them on through. I welcome them all of them. A couple things to talk about and think about. Number one, very bad news. I can't get reservations for skiing tomorrow. Everybody feels sympathetic for me. It's terrible. It's snowing like crazy outside and I can't do anything about it. The other thing to think about here is this little situation, and I'm going to open an incognito window so you can see it a little bit more or I can show you a little more how it looks. Remember, guys, go to my DayTraders FX YouTube channel. So this is where we have a whole bunch of great playlists. Obviously under videos, there's, I've made quite an extensive amount of videos. And if you don't want to go and sift through all of those, and there are a lot of them, trust me, I've been making videos every day, every week for a very long time. But I tried to kind of compile some of the most important, urgent videos that I think everybody needs to kind of have a look at. And you can find it right here. Tastyworks tutorial. There's 5 videos on how to really get your way around Tastyworks. Option trading basics. There's 7 videos in there. How to really dig into the option trading basic details. MetaTrader 4 tutorials. These are all brand new. There's 6 videos in there. And then, of course, some trading psychology, 5 videos of getting started on forex, trading forex. There's a lot of really good stuff there. If I do say so myself, So have a look at that. I'm pretty darn positive that there will be something for everybody. So there's the link there, unless I hit a button. Nope. Okay, good. So have a look at that. That's what it'll look like. All those videos will be good. They should be good. And I think there's some good details there. Okay. Today we are going to talk about, I want to talk about some charting stuff. Janae, that can be found just in the link right up above. I just posted the link, and I'll post it again right there in the chat. So you can get to all these videos. They're just that guy right there. So the link that is in the chat there will give you access to all the videos. De nada, de nada. Okay, guys, so what I want to talk about is whether we're trading stocks, whether we're trading options, obviously, whether we're trading currencies, what role does charting play? And it is very big and different and little and so on, depending on kind of where we're coming from, right? So we've talked about this a little bit, but it's certainly come up a lot, right? And so I want to discuss this in a little more detail here. We're going to talk today about charting, and we're going to talk about, you know, when you go to this playlist right here in the option trading, the option basics, right? I talk about, you know, how do I find options I want to trade, right? If we go to the getting started in the currencies, getting started in forex, you know, this is all about technical analysis and how to kind of find these trades. And so I want to do a little compare and contrast, right? So how do we analyze? So we're going to talk about analyzing charts for stocks, options, and currencies, which, you know, forex, right? And we're going to talk about what kind of the big difference and what are the things that we look for there and how does that change a lot. Technical analysis, right? Let's discuss this for just a moment so that everyone can kind of, you know, so we can be totally clear on this. The two main kind of types of approaching any kind of trading is technical analysis, and then there's fundamental. I do a terrible job typing and talking, but so that's how it goes. Does everybody feel like they know kind of the difference? Are you guys familiar? Technical analysis versus fundamental analysis? Everyone feel pretty good about that? You feel like that makes sense or sounds familiar? Anybody? What do you guys think about that? Have you heard of technical analysis versus fundamental analysis? Good. Okay. Good. All right, Mary, Lenny, good. So what these refer to specifically, technical analysis is going to be a big focus on historical data, right? And that's going to basically consist of trends, support, resistance, patterns, etc. Right? That's basically what technical analysis is. Fundamental analysis is going to focus a bit more on, you know, the fundamentals, right? Numbers, earnings, you know, basically news, right? What are the news? What are the details that we can get? You know, what are the metrics of the market that we can get? And that's where our fundamental analysis comes from. And technical analysis is just saying, hey, I don't care about the news. I don't care about the numbers. I don't care about anything. I'm just going to look at what I can see on the charts. Now, this is where things are kind of interesting. Mel, and Mel, you make a good comment. Technical analysis makes sense. Fundamental analysis, you're saying you're usually wrong. And don't feel bad, because fundamental analysis is what, you know, banks use, investment banks and hedge funds, you know, and then of course everyone looks at technical analysis as well, but those big institutions typically lean towards a fundamental analysis. So Mel, if you find yourself coming up wrong a bit more on the fundamental analysis side of it, don't feel too bad, because Citibank, Citigroup has 500 analysts working around the clock to crunch the numbers and come up with a recommendation on a stock, for example, or a sector or the market in general. So you being one person, trying to figure out the numbers, it's hard. It's hard. So fundamental analysis is very, very difficult because most of us don't have a degree in economics. Some do, certainly some do, finance and economics, but even so, that guarantees you nothing, right? Fundamental analysis is a very difficult thing. Hedge funds and investment banks and all of those groups spend a lot of time and a lot of money and a lot of human resources to come up with a conclusion from fundamental analysis. So this is why most traders, especially individual traders like we all are, most of us don't use much in the way of fundamental analysis because it's a very resource-heavy situation. It requires a lot of knowledge and a lot of just stuff. It's hard to do. It's really hard to do. Now, of course, as with anything, we could call the technical analysis fundamental analysis. We could call it, Republican and Democrat, religious and, atheist, whatever, right? Everybody from their side of it is going to say this is the only way to do it. I know plenty of traders that only look at the numbers and they say technical analysis is a joke. And of course I look, I'm much more into technical analysis myself, and I look at the fundamental stuff and I say it's really hard. It's really hard to make sense of it. And so it's pretty common to see both sides of the coin there and say, okay, everyone has their, what I do and how I do it is the only way to do it. But I think it's pretty generally accepted that a fundamental analysis type approach is challenging. It's difficult, it's tough, it's hard to do. So we're not going to do that much. We won't do that type of analysis much in the group. We're going to lean more on the technical analysis, but I want to talk about the role that technical analysis plays specifically in currencies versus stocks, right? So, how do these things differ, right? Again, fundamental analysis is something that is tough to do. But when it comes to the stock market, I would almost put in a third type of analysis, right? Which is more of I don't know what you would call it, maybe a psychological. Is that how you spell psychological? That kind of thing. Something there's a different kind of analysis that we do in the stock market quite often, and it's more of a where are people greedy and where are people afraid. So we're going to talk all about this, and I hope that this comes out right. I've been thinking about it a lot all week long, and it's a tricky topic. So let's hope that this comes out in some sort of recognizable fashion. Okay, so let's just go. We'll dive right into the currencies real quick. In currency trading, again, the big focus is in technical analysis, because I tend to see that things that have a big benefit in going up and a big benefit in going down react much better to technical analysis. That's why futures markets, right? There's a good reason for futures prices and futures markets to go down, right? Nobody wants the price of coffee or soybeans or wheat or corn to go up forever, right? How much do you want to pay for a bushel of corn? $9 million? No, heck no. So there's a huge advantage for corn to go up and for corn to go down. There's a huge advantage for currencies to go up and go down, right? The US dollar is not headed to zero, at least not this week. But it will go down a lot probably. But guess what? It will go up a lot as well. The Australian dollar may go up a lot and it will come down a lot. And the New Zealand dollar and the pound and the euro and all these currencies go up and down a lot. So when there's a big benefit to going both directions, technical analysis seems to be a much more reliable way to analyze these charts. When there is more of a benefit of something just kind of being one directional like stocks, right? Nobody wants a stock to go down. There are short sellers out there that say, hey, I've done my analysis. This company is BS, right? And I'm going to short their stock until it goes to zero. But that makes up a very, very, very small portion of traders and the market. For the most part, company owners and traders and everybody wants the stock market to go up. There's no benefit for them to have the stock market go down. Don't judge my peach colored cup. It might be salmon. Is that salmon? I don't know. Anyway. So on the stock side of things, there's no real benefit to anybody for a stock to go down. On commodities and futures and currencies and all of that stuff, there are basically equal benefits for that instrument to go up or down. So that is where technical analysis can be super effective. If I apply technical analysis to the stock market and I say, hey, here's a bearish pattern that could be forming, it might just keep breaking bullish on that bearish pattern that is forming that never confirms. It might break bullish over and over and over and over and over again, right? I mean, there's probably 100 examples of Apple doing that over the last several years of, hey, here's a double top, here's a rising wedge, here's something that might look bearish for us, and then it just breaks higher and breaks higher and breaks higher. So if you shorted Apple 3 years ago, you're hating your life, right? So stocks tend to just have that rising move, whereas currencies go much more in a up for a while, down for a while kind of pattern. Let's look at some things on the currency side of it. Let's look at the US dollar. So here is just simply the dollar index, right? And the dollar index looks like this, and this is just the dollar itself. So when I look at a pattern like this, I can say this is very reliable, right? This is a very reliable pattern. This is a huge double top. And so, again, when we're talking currency, when we're talking technical analysis, typically we're going to be talking about currencies, and typically we're going to be talking about trends, patterns, support and resistance, that kind of stuff, right? Historical data. So when I look at this kind of a pattern, I say, well, big double top. What is this thing likely to do? I mean, at least it's likely to go back down to these big lows, if not continue lower, right? That's probably our likely scenario. And most of it has already, much of it has played out. Not most of it. It could continue down for a long time, but much of it has played out. We had that double top way up here, and this thing is down, a pretty good chunk since. The dollar's kind of been getting crumbled in the last little bit. So we look at that and we say, okay, technical analysis tells us that that's that kind of a pattern. We might look over here at the pound dollar and we say, okay, pound dollar, here's a long-term pattern here, right? A long-term trend. The pound dollar has really been going down for a long period of time, big runs down, and then it literally did nothing from about 2009 to about 2014. It was a slow 5 years on the pound. And then it takes another dive, and now it's consolidating. And now we have, a couple of elements at play here. We have long-term trend, which has been down, but a long-term trend up or down eventually has to reverse. In currencies, it has to reverse. I don't know when the last time was that you guys heard of a company, a country going, bankrupt, right? Sorry, guys, we're going to sell our currency and our government to Blackstone, and we're out. We're out of the country business. It doesn't happen, right? So when we're talking major currencies, they're not going to go to zero. They're going to make big runs in one direction or another, and that's it, right? Well, Greece and Argentina, and we have a couple of examples, but Greece still uses the euro, right? And they're still part of the bigger picture there, and the euro is not going anywhere. So we have this long-term trend, we have long-term support, and we have a long-term pattern here. And so this is how I'm going to be looking at this currency, right? I'm going to say, okay, here is, going to clean this chart up a little bit. Here's this big rundown from the highs of 2007. Pound dollar's just been coming down since, big dip down here. And you might think, well, that thing went down for 10 years. Yeah, it did. We had a big rundown, and this all happened fairly quickly, right? That was basically middle of 2007 to, about it was about a year and a half of downward movement. And then that went from about 135 all the way back up to about 170. That's a huge move right there. And it slowly worked its way up. So, we had about 2 years of downtrend, and then about, from this absolute low in 2009 to this high in 2014. So we, had a slow uptrend for about 5 years. And then we ended up with another couple of years of downtrend. And it's very, in the long-term picture, it's been an overall downtrend, but really in kind of 2 to 5 year chunks, it's had a very nice trend, reversing trend every couple of years. So when we see this kind of thing and we say, okay, here is the pound dollar, it's made this big rundown. So we've had this long-term downtrend, and we know that any really long-term trend has to eventually end, right? And just like we saw on the dollar index, the dollar index, has had these couple of year chunks where it runs up for a little bit and it runs down for a little bit. But overall, it's running higher until it gets to that big double top, and now it's turning at that huge pattern. Well, the pound dollar is doing the same thing. Big long-term run down here, and then what happens? It hits basically a 20 or 30 year low, gives us a big double bottom, right? This is the same kind of thing that the dollar index is doing. Dollar index hits that high, pound dollar hits that low, hits this low again right here, and then we get, basically, we can get in as much detail as you want, but this is basically a bear trap, right? This breaks that all-time low, and people go, okay, jump into this. And then, of course, it turns and goes the other way. So that's a bear trap right there. That tries to catch the bearish positions and wipe them out heading the other direction. But with this long-term trend and a big support level down here, this support level is held pretty consistently well at around 120 for a very long time, with the exception of, coronavirus pushing it through for a couple of days before it, reversed and came back. So that long-term trend and a long-term support, and now a long-term pattern, right? This long-term pattern. And this pattern is what I had put in over here, which is this big bullish head and shoulders pattern, right? So we look at that and we say, okay, here is a big, crazy looking. I mean, it's a wild looking head and shoulders pattern. But here's our big head and shoulders pattern, and this is our big neckline, right? And we've talked a lot about patterns in the past webinars and so on. There's our neckline, and we have the pound dollar breaking that neckline. Ooh, baby. That's a big movement right there. So what we're saying right here is it just so happens that this is a bullish movement, something similar that we'd look for in the stock market is a run up. But this is a bullish movement in the currency market, but we don't care, right? If the exact reverse of this happened and there had been a long-term uptrend and we're hitting, 20, 30 year highs, and we have a head and shoulders pattern that's reversed, right? A bearish head and shoulders pattern. This is a bullish one. And we would do the exact same thing. We would trade the heck out of it down. We'd trade it straight down. But guess what? I don't care what's going on in the UK. I care about all of our lovely UK members, but I don't care what's going on as far as the news goes, because everything that I need to know is on this chart, right? Because this is a high volume chart that benefits from both bullish and bearish movement. So then whatever's happening in the news at this point really no longer matters. It really does not matter anymore, because there are as many reasons that this should go up as it should go down. And if we try to get caught up in those reasons, right now you could say, well, Brexit is happening in the UK, and I don't want to trade the pound dollar while Brexit is happening. Are we going to miss out on a huge movement? Most likely. So who cares about Brexit, right? What we care about is we see a massive pattern. We see a huge double bottom, which on this end turns out to be a very well-formed bullish pattern at the bottom of a very long-term trend at a major support level. We just trade that up. Again, I don't even need, this year, I have hardly looked at any news in the currency market, right? I always watch news like employment numbers and interest rate news and so on. And when Corona hit and all these, huge movements happened and companies got wiped out and all kinds of things happened, I said, guess what? At this point, it doesn't matter now what interest rates are. It doesn't matter any of that stuff. I mean, those are going to be big impacts on the economy, but it's not there's no more news that will affect the currency market. The currency market will be purely technical. We have to trade what we see. That is one of my favorite sayings in currency trading is trade what you see, not what you think, right? So in currency trading, our opinion mattereth not, but what we see on the charts matters a huge amount. But we've got to know what we're looking for. We've got to know what we're looking at. And that is the technical analysis side of it, right? That is saying, look, here's all I really care about. What is the long-term picture on this chart? So what are we going to do with the pound dollar? We're going to trade it up. Are we going to get some volatility from Brexit? Are we going to get some scary things happening? Probably. But it doesn't matter because when we're in this kind of a situation at this point, this has to go up. It might pull back. It might get choppy. It might get consolidated. It might get ugly. Doesn't matter. This has to go up from here. This is a massively bullish pattern. And again, whatever is happening on the news related, government related, whatever side, doesn't matter anymore. It's what the charts are telling us, right? So you could say, well, is news totally worthless in currency trading? Yes, but not really actually, because what happens is when markets are behaving fairly normally, when everything's normal, right? When people's biggest concern is that they got a double caramel macchiato that had regular milk instead of oat milk in it, then interest rates are a big news. Then employment numbers are a big news, right? When everything is going well and we're starting to get nitpicky about the small stuff, that's when news impacts the currency market a bit more. But it won't change the fact that this big picture is the most important picture. Now, when things are like they are now, where there's so much news and so much craziness and people are just like, what's going on? Then this is where the market is now basically numb to the news, right? And that's why, we've chatted in the trade group a little bit. Brexit's happening, UK interest rates are happening. Don't care. It's not going to affect the charts at all. The market is numb to the news. It is now operating completely on what we can see on the chart. Speaking of currencies. So that's a little picture. That's a little explanation. That's a little detail of how we are going to chart the currencies. We need to find a prevailing pattern, right? A prevailing situation that says this is what is in control. And so when we look at this chart and we say long-term downtrend, double bottom at, however, this takes us all the way back to, 1992, 1993, right? I don't know how many years ago that was, like 60 years ago or whatever. So this takes us all the way back to 1993, and the pound dollar has not been lower than this little point since before then. So we say, okay, pattern, double bottom, pattern, bullish head and shoulders pattern, support, long-term downtrend. There's nowhere for this to go but up. I have no doubt that this will continue higher, even if it continues lower. Now, there's a whole other thought on how do we trade that, right? How do we trade that? Because currencies really move a lot, and everybody wants to feel safe and comfortable and secure with the fact that, I'm only going to risk 20 pips on this thing, and if it works out, great. If it doesn't, great. This is the kind of trade that we do a swing position. We might sit in it for 6 months. We might end up with 10 positions. We might have to add to our trade in decent drawdown, right? But when we look at the prevailing pattern and we look at the overall picture, we say it's worth it. So I'm going to start with a very small position, and I'm going to add to that trade. Every 100 pips it goes against me, I'm going to add to it again and again and again until I have 10 positions, and then I'm going to forget that I own it. And I'm going to let that sit for a year if it has to until it runs up 2,000 or 3,000 or 4,000 pips and I make a massive killing. And that's going to come once again from this example of looking at these types of patterns, looking at this kind of stuff. Another example of that, there's the pound dollar. Here's something that I've been trading quite a bit in the group. New Zealand yen, right? The yen has a big impact with the stock market. If the stock market is strong, the yen is weak. And if the stock market is weak, then the yen is strong. So upward movement on this pair means yen weakness. But again, what do we see? Do we see something very similar? Now, the pound has been lower many times in the past. Has not been lower many times in the past. The New Zealand yen has, right? It's been all the way down here in 2008. And so we're kind of really more, at this point, we're really more in the middle of the range. But again, long-term downtrend, the last 5 or 6 years, this has been going down. We come into this point of, it's not an exact support level, but it is a very strong area of consolidation, right? Taking us all the way back to 2009 there. So a strong area of consolidation that seems to have held, that spit out a nice bullish pattern, which is a head and shoulders pattern. Where is this going to go? Up. It's got to go up. So I look at that and I go, yes, if the stock market has a big hiccup and pulls back a bit, then we could see this thing pull back a good bit, a lot even. But I would still expect this, from what I can see on this chart, long-term downtrend, major consolidation / support level, and lots of upside potential. I would expect this to just go higher, How does everybody feel about that? What do you think? Does that make sense? Does anybody have any questions about that? Because now we're going to transition a little bit over to stocks and how this picture plays in. But I want to make sure that I don't run away from this too quickly. What questions do you guys have about what we have just explained? What questions? What comments? Does that all make sense? Does anybody have anything they want to bring up? You guys all feel okay about that? If so, we will move on. Raymond, explain a position. Well, we're talking more about charting right now. So just the position details, we'll cover that. But I want to just more focus on kind of the strategy that we approach this whole kind of setup. Lenny, when I see a lot of ups and downs, I have a hard time seeing which way the head and shoulders goes. Yeah, and Lenny and everybody that's kind of getting used to technical analysis on charts, it is, learning how to identify patterns in charts is very much just practice, right? It's like when you go to the doctor and they say, "Oh my gosh, look at this X-ray," and you go, I don't see anything. I actually had an experience. Well, we had a couple of experiences over the summer. I think all my kids broke a bone, and so one of the members of the group is a doctor, looks at bones, whatever. And I said, "Hey, have a look at this X-ray." I don't know if I never trust my own doctors, right? I always trust people that I know and trust. So I remember sending this X-ray to this group member, and he said, "Oh yeah, see that little thing there and that thing there, and that that's a clear sign of whatever." And I was like, "I see nothing. I see absolutely nothing." But when you look at 10,000 X-rays, you go, "Yep, that's crystal clear." And it's the same thing with patterns. You just got to study patterns, and then you've got to look at them and find them on the charts. A good practice is to go back and look at past patterns, because they really start to pop out. They become very, very easy to identify. So yeah, patterns are great. But it just takes a lot of practice. So remember the chart patterns. We did a whole webinar on chart patterns. Just alone, and that's some good stuff. But I've got some good links on patterns and some videos and some details on that. And I can share those with you guys happily. Okay, so again, in currency trading, we're trading what we see, not trading what we think. Long-term trends, long-term support and resistance, long-term patterns, that's what we want to find. We want to find as much of this stuff on weekly charts as possible, because that's going to give us the big picture of what we're looking for. Okay, let's transition that into stocks, right? So as we talked about here, we're looking for, we're looking to kind of identify which one of these is going to be, the thing that we use, right? So when we look at stocks and we say, okay, fundamental analysis is good, it's helpful. I mean, that's kind of what Warren Buffett does, right? He says, well, I sit and I read for 12 hours a day, and then after 2 years, I buy stock in a company. I mean, that sounds terrible. But I mean, it also sounds great being a bazillionaire, so maybe it's worth it. But technical analysis on charts, on stocks, only matter as far, and by the way, this is not gospel. Don't take this as this is the only way to look at it, or you disagree or whatever. And that's fine, disagree, because this is kind of my outlook. And so technical analysis on stocks, I only look at a couple of elements, right? I'm not looking at trends so much. I'm not looking at support and resistance and patterns so much. I do kind of peek at a couple of those things. But the two biggest things that I want to see when I'm trading stocks is I want to see that number one, stock, well, it's not trading at an all-time high, right? Pretty simple. I don't want to buy a stock at its all-time high. And the other thing that I'm looking at is distance from current market price to moving average. And let me show you kind of what I mean by that. These are some of the biggest determining factors for me about what I'm looking at in a stock market. Now, the SPY is a great example, right? We are currently trading at an all-time high. Just that, we're trading at an all-time high. And we have a lot of distance between current price and my 200 moving average, which is totally my go-to, and my 50 moving average right there. We have a lot of distance. So in this area right here, there's lots of distance, and we're trading at an all-time high. So my question would be, or not my question, but my analysis would be is, there's no way in swear word that I'm going to get bullish the SPY right now. Now the SPY may continue higher, and it is continuing higher, and it could continue higher for 2 or 3 or 4 or 5 more months. But there's no way I'm going to get bullish the SPY right now because of these two big factors, right? Every time we have, and I've talked about this many times, but pardon the repeating, every time we have big gaps between the 50 moving average and of course the 200 moving average and price, there's big corrections, big gaps, big corrections, big gaps, big corrections. It's actually pretty hard to find any kind of correction without some sort of pretty decent gap in there, right? If we go back over here and we say, okay, 2008, things started to sell off pretty hard. We had some pretty big gaps in here, right? It's some pretty big gaps. That was a double top, big gaps, and of course big gaps here in looks like Mickey Mouse, my Mickey Mouse drawing. I can only draw something by accident, by the way. I have no ability to draw anything. But when we have those big gaps, that's where those corrections happen. Likewise, where did this market bottom out? In a big gap, right? Same thing over here in Corona Town. Where did this bottom out? We had a lot of big space down there. So big gaps are bad they're good for reversals, they're bad for continuations. But I don't like to trade reversals so much in the stock market because these trends are strong and they're very often one-sided, right? Currency trends are very two-sided kind of trends, right? Stock market is a very one-sided kind of a trend. And so I tend to stay bullish in the stock market. I mean, what do I think would be a decent trade on the SPY right now? Sure, you could buy a put with maybe a 1-year expiration, like a leap. You could buy a leap on SPY. That'd probably be okay. But I like to stay bullish. I like to stay bullish in the stock market. I don't know what to say. I like to stay bullish because that's the overall prevailing trend. You can't look at too many things and say, currency market doesn't typically have this, right? Straight up since 2009, we don't really have that in the currency market. We have, we have this, and we have this, and we have this, and maybe we have that, and then maybe we have that, and that in the currency market, right? This has just basically gone straight up. It's just basically gone straight up. So why would I want to be bearish for the very short periods of time that the stock market goes down? Not to say the stock market won't go down, not to say that there's not some big crash coming, but the stock market tends to recover and it tends to go up. So I like to stay bullish. But I also, if I tend to stay bullish, then that's going to X out so much of technical analysis. A lot of people tell me, I'm not finding setups that I like. And I always tell people, the only setups you should be looking for is is stocks. Our whole goal is to find stocks that that are in kind of an opportunity sector, right? Retail stocks have been murdered. They've been murdered, right? All these retail companies are out because of coronavirus. They've had to like reinvent their business. Everything's online now. We're selling everything online, and and those that have survived have made massive comebacks. In our trading group, we've traded American Eagle Outfitters, AEO. Do you know that I bought clothes at American Eagle like in 2000, literally 20 years ago, and they were borderline on the edge of being totally out of style, right? But I was like, hey, they got a deal on 2 shirts for 20 bucks, whatever. But here they are 20 years later, and their stock is soaring, right? And so we want to keep in mind that we're looking for undervalued stocks that are in a sector that has a lot of comeback potential, but are still relatively cheap, right? Now, there's a lot of economic numbers you can look at, and the finance people out there will say, well, there's a calculation for that. I don't know what it is, but I don't really care, because what I want to find is a stock that is not trading at its all-time high. And I want to find something that does not have a ton of distance between current price and the 200 moving average and the 50 moving average, right? The rest of technical analysis on stocks, in my opinion, is garbage, right? I don't care about indicators when it comes to stocks. I care about indicators a lot in currencies, but I don't care about indicators much in stocks. I don't care about patterns much in stocks, right? I don't really care about any of that stuff. Now, I will tend to pay a little more attention to bullish patterns in stocks because stocks want to be bullish. So I'll pay a little more attention to that. The bearish patterns, I just tend to not do that. I don't want to get in a long-term trade or a big position on a stock that is, coming down a bit. A lot of people made a lot of money shorting stocks. I don't know who those people are, but a lot of people do. I think we need to stay on the bullish side, and we need to pay more attention to the bullish analysis. But when it comes to the overall technical fundamental analysis of the stock market, these are the 2 things we want to look for. That's really it. I mean, that's literally really it. We're looking for something that's not trading at an all-time high, and something that is not a ridiculous amount of distance from the 200 moving average. Because when we see those kinds of things happen, that's when corrections happen. But I don't like to tempt the market and say, well, a correction's going to happen, so I'm going to trade this thing down. Because guess what's going to happen? This is going to keep going higher for another 3 months, and I'm going to lose money on it. So what we have to do is just say, okay, what are the things that are working, right? The stock market tends to go higher, so let's stay bullish. But we need to know a few kind of red flags of maybe it's not going to go higher here, right? So I am all the way technical analysis on currencies, and I'm literally 10% of the way technical analysis in stocks. I think for the most part, any line you draw on a stock chart is virtually worthless, right? We need to know where are sectors that have been lagging and have an opportunity to come back, or are showing us that they're coming back. And we have a big distance between these moving averages, and where are we in terms of long-term highs and lows? And that's it. That is it. And of course, when you go and you look at my videos over here, where I talk about where I talk about like in the option basics, right? We talk about what we want to see for a stock, for an option that we want to trade, right? And there's some factors in there, weekly expirations and close strike prices, and we can make enough money selling calls and so on. But when we're just talking pure charts, this is, in 20 years of trading, the best I can figure out that is important and works. So what do we have? Questions, comments, thoughts? How do you guys feel about that? What questions do we have that are somewhat related to what we've been talking about here? Anything from anybody? Do you guys there with me on that? Okay, good. All right, so I want everyone to kind of sit on that, digest on it a little bit. It's an important topic, right? Because our analysis really does change quite a bit from the stock market to the currency market. It's actually it's actually very different. It's kind of like, you know, the stock market's riding a unicycle and the currency market is, you know, doing a handstand. They're a little, they're quite different. They're quite different. Justin, so where would you put your credit spread on such a chart? Well, on a chart like this, Justin, that's a good question. You know, if this were a stock that A, we could afford to own, B, we wanted to own, and we looked at it like this, we could put, you know, we could use our strategy. But with that kind of a distance there, we'd say, okay, I probably need to extend my expiration. I may need to go out 2 months on this thing because I need to have longer lasting protection. Because if this thing continues to trickle higher for another month or two, and then makes that correction, and it will make that correction at some point, we need to have a longer time to have that protection on. So, you know, we're always going to use the same parameters for placing a credit spread. We're going to sell basically an at the money put, and we're going to buy a put one strike below that. That's it. And we do the same thing here. We would just give it a longer expiration. Does that make sense? Answer your question? All right, guys, that's it for me. I've been talking for an excessive amount today, and I think that's all I got. So does everybody feel good about that? Everything kind of making sense there, and so on. Uh-oh. Okay, guys, that's it for me. Have a wonderful rest of your day. We have lots more webinars and lots more details coming. We won't have the Thursday night webinar for 2 weeks. So I'll see you guys in 2021. We won't do it next Thursday or the Thursday after because that's New Year's Eve and Christmas Eve. And I'm going to be doing something else other than trading and talking about trading. So I'll look forward to seeing you guys back here in 2 weeks in 2021. Happy holidays, Merry Christmas, Happy New Year, happy everything to everybody. Hopefully you guys have a really good break and a really good time. So thank you, Mary. Thank you. Best to you and your family as well. Sherry, you too. Yes, Lenny, happy holidays. David, yes, good to see you. Good. Happy holidays to everyone. We'll see you guys all very soon. Thanks, guys. Take care.